Thank you for joining us today in our Grains 2026 Outlook. It's a pleasure to be here. I'm Italiani from Market Intelligence team. Luiz Roque is with us. We're going to discuss some macro updates and fundamentals for corn, soybean oil, soybean meal. So while you are joining us in the room, just a friendly reminder that we have the Q&A tool in Zoom bar, so be able to share your comments, your thoughts, some questions. By the end, we're going to have a momentum for that interaction. So this is an initiative that we prepare inside HedgePoint Hub, so feel free to join us there as well to see the recording content. We started the beginning of the week with sugar, yesterday coffee, today going to discuss grains and oilseeds, and tomorrow we have the cocoa market with Caroline. So let's start. We are a risk management company, so market intelligence is one of the main pillars to deliver a risk management strategy for our customers. So a pleasure to have you all here with us. Beside grains market and all these initiatives that we produce, we update those inside our main tool, HedgePoint Hub. So more than just the content, we have important tools for manage your position and your risk management solutions. Beside grains, we also cover the cocoa, sugar, coffee, energy, and FX markets. So join us there to check more details and more information that we produce. So let's start, discuss a little bit about the macro impact, the USD, how this is impacting the market. Then we go through soybean and corn, weather, what is weather promised us in the coming months, discuss on detailed supply, United States, Brazil, and Argentina. Then we go a little bit deep into China, what can we expect about China for this year, and conclusions, some key points for us to monitor. So as I mentioned, I'm Italiani, Market Intelligence Manager. It's a pleasure to join us here covering this grains market. And Luis, welcome. Thank you to be with us.
Thanks. Hello, everyone.
Let's start. So when it comes to macro update, we need to discuss how the DXY is performing and how this bearish trend is looking ahead. So we see the weakness for the American economy. So in this expression, the DXY, we saw investors losing confidence in U.S. economy through 24, 25, Fed's interest cuts in 25 happened, and what we are expecting for 2026, as we see yield advantage versus other currencies for DXY. So we have in the radar, this is evolving new chapters every week regarding U.S. tariffs, also contributing by pressure economic activity, U.S. economic activity. So it's important to monitor this shift in geopolitical and how this is impacting the market. Let's go a little bit deep in some more elements and data for us to support this view. So we saw the U.S. economy growing debt is becoming a key point. So we see here the right chart. This is an important element for U.S. economy and actually a problem for them. So the debt is now set to break historical record. We can see here on detail, despite as they are signalizing further cuts, interest rates, this is still a problem for the U.S. economy. So longer U.S. Treasury bonds are also rose in past months. So this makes the U.S. more vulnerable to hate stocks short first. And connecting that to economic elements, we need to remember that besides control inflation, the central bank for the United States also has the challenge to keep employment at an important rate level. So they need to manage those two challenges to see how economy will perform. While from one hand, we see better numbers for inflation, we are not seeing the same movement for the employment market in the United States. Connecting that to yields and U.S. debt, we see that investors, and when we mention investors discussing U.S. economy, we are mentioning other countries such as China, Brazil, India. So they are changing, they are taking measures to decrease their overall exposure to American assets. We saw this important decrease here, mainly for China, 17%, when you compare year over year, so 2025 versus 2024. This is showing how these dynamic has been changing. The overall sentiment for the market is showing a kind of risk aversion increase, and we can see that clearly when you check on the tail gold prices. So gold prices increasing show us that market overall is in a more risk mode partly. So for 2026, we are expecting rate cuts, another rate cut for United States, probably more into the middle of the year. So the US summer, this is something in the radar. PCE is pretty in a better shape than in the past. So they're now signing that any further easing, of course, will happen, but will be limited. So it's lower, really connect to data sentiment, prioritizing more credibility over rapid stimulus as we saw last year. So the pattern for 2026 is changing a little bit, and we need to monitor how this will evolve in the coming years. Talk a little bit about Europe. So Europe has been showing resilience despite recent challenges and a long war taking place in their region. European especially grow in 2026 is around 1.2, 1.4. So important resilience message coming from Europe region. So that the central bank is projecting average growth for 1.2 in 2026. An important region when it comes to soybean meal markets, for example. They are important consumer for soybean meal from America. And also an important producer when it comes to corn market, for example. China is the main consumer for soybean in the world, soybean and corn. So monitor how China is performing is pretty important. We see the GDP growth target for 2025. It was achieved, but we are seeing China in a different momentum. The pace of increase in their economy is a little bit slow than in the past. So we see the dollar weakness adding pressure to Chinese exchange balance, and of course to the growth, because the Chinese economy is mainly driven by exports. We can see here the share of China exports per destinations, an important change in this pattern with United States shares were decreasing in the past year. So they are changing the portfolio of their exports. Connecting that to the weakness of USD is a big challenge for them. Once the growth is still stable, is a little bit fragile, and we can detail why. So inflation remains to be due during 2025. You can see here the performance of CPI for China. 2026 is still slow with the real estate sector acting as a major drag. We see here the performance for China real estate sales. They are declining, and this is a challenge for Chinese economy. So the dollar weakness also has been supporting other emerging markets. Here we compare America and other emerging markets. The detail, some exception here for Argentina because of the recent adjustment that they did in their own economy. But we can see here this movement for some BRL valuation here. This has been supported by the weakness in the USD overall. So going a little bit more in details when it comes to BRL, it's a pretty important rate when we talk about Brazilian. Brazilian is one of the main exports for corn and for soybeans, so pretty important to monitor how BRL tend to perform this year. We see this gap between the through, but the weakness in index Y really impacting the BRL performance. So mainly this gap between interest rate supporting the flow of USD to Brazil adds pressure to our currency. So for United States, as we mentioned, market is expecting further cuts for 2026, 1 or 2 during the year, probably starting the middle of the year. And for Brazil, finally is expecting to see some reduction in our interest rate for 2026. So this gap, even though Brazil will tend to start reducing, this gap tends to continue at the same level. So this is important once it will continue to support the flow of USD to Brazilian economy. Once we see higher interest rate leading to higher capital flow, as you mentioned, you see here the movement, pretty impressive movement in the beginning of this year. We have, on the other hand, a big problem that is Brazilian debt. So this is a year of election year. This is a topic pretty important for Brazilian economy, and this had weakness to our currency once the same scenario for the United States, we have challenges with our debt, national debt. Comparing the performance of emerging markets and in years of election, here that detailed in orange how the currency of those countries performed in an election year. Fair to mention that this year we're going to have election year, not just in Brazil, but Colombia and Peru as well. The main question here, you cannot see a clear partner, but what we see is volatility. So volatility tends to be the name of the year for 2026, when the measure is FX, mainly for Brazil. So the takeaway is what can we monitor, what we need to monitor during 2026, dividing between the United States, Brazil, and the world. So for the United States, as you mentioned, the dollar is pressured by the US political uncertainty. So this is tend to continue during 2026. The risk debt long-term yields remain key factors for the FX, for USD. So investors tend to continue shifting towards safe havens such as gold, as we saw. For Brazil, these rate differentials supporting the IL, this tend to continue, as we discussed a few slides ago. Debt and election are key points for Brazilian economy, so we might see depreciation for BRL toward 5.5 probably. Is it possible, as we have been already seeing on our focus survey through the year? And when it comes to growth, pretty important to mention that the resilience for European Union. So on the other hand, we still see some tensions when it comes to the relationship between United States and European Union, and for China still facing ongoing pressures from real estate weakness and weaker exports when it comes to China. So those are the main topics for macroeconomics, and now we're going to connect all them to the supply demand for grains. From one side, when you have USD weakness, we could say that we're going to see support for commodities, if you have a broad picture. But we need to go on details about the own supply demand fundamentals for those commodities. So it not tend to see the case for soybean and corn, and I'm going to detail why. So entering the soybean and corn markets, what we see is that the 25-26 cycle, the second table here, we are seeing an increase in the world production for soybean, and the demand is not increasing at the same pace. We need to remember in the past, for example, the main consumer, Chinese imports, Chinese crush, was used to increase in a better pace than supply was able to increase. So by that time, we go through many years of important support for soybean, with changes in supply really impacting the level of the price. Recently, what we have been seeing is a more stable growth when it comes to China. Of course, they are growing. So came from 108 and 112, is expecting a little bit increase for the new cycle, 26-27, if you can mention like that, but is increasing at a slow pace when you compare to supply. When you compare to supply, you have been seeing year over year, Brazil increasing their production. United States came similar level. So this is adding directly to ending stocks. So the picture that we have been seeing for soybean the past years is a scenario a little bit more comfortable when it comes to prices. And we're going to detail why and where and what are the risks that we need to monitor. Talk about corn, the scenario is a little bit similar. Supply is increasing in a better pace than demand. a little bit more diverse than the soybean, and important lines for us to monitor. For example, in Brazil, we have an important new line of demand taking place in the corn-based ethanol. So this is a little bit of competition for Brazilian exports. For example, we are expecting better scenario for Argentina comparing to soybean for corn, so better increases for corn production. Of course, for the new cycle, we're going to go a little bit on details, right, Luis? For United States, picture tend to shift a little bit, but the overall message is a market a little bit more close to the equilibrium for corn as well. Let's see how prices have been performed. So when it comes to soybean, here we have the FOB prices for main origins, United States, Brazil, and Argentina. And what we have been seeing is the entry of new crop putting pressure to Brazilian offers. So we see Brazil now as the main competitive. We are in the middle of the harvest, so it's supposed to be like that. And we see Argentina offers ranging second, but we cannot compare the same amount of volume. Argentina market is more oriented to crush. So we have been seeing now Brazil as the main offer for soybean. And that's why market is question about when you mention China buying more from the United States, the big question is it will be right now when the Brazilian offers are the cheapest in the world. So let's detail it a little bit in a few minutes. When it comes to corn, the picture here, we have more origins to contribute to the supply of corn. So what we have been seeing here is for prices Argentina falling, now competitive on the international market. So we see here, Argentina is the purple line, is the cheapest corn in the world, of course, related with less volume than other places, but is an important level, is setting the lows for corn offers. And we see Brazil, the least competitive here, on the other hand, was Brazilian summer corn, the one that we harvest now is oriented to the domestic market. So now Brazil is playing the international market for soybean, not for corn. And we're going to discuss what can we expect for Brazilian winter and how this tend to perform. Let's check weather. This is the main topic for this year. So Luis, please.
Yes. Hello, everyone. I'm glad to see you all here. So first of all, need to talk about the weather before entering in the supply and demand side, because the weather, of course, is an important factor for the definition of the crops over 2026. So starting with the La Nina neutral El Nino, or the ENSO phenomenon that we can see happening over the year. We have to remember that we are ending a period of La Nina and entering in a neutral period. So between March and August, the trend is for a neutral weather that's gonna take right in the middle of the period of planting and development of the new U.S. crop. So this is pretty important for us to see and to have an eye on, because I have to remember that in 2012, over the past 15 years, so we have the most significant losses in the U.S. Crops in transition between La Nina and neutral pattern. So we're not saying that we're going to have big problems in the U.S. crop, but something I have to keep an eye on, because this is a pattern that could repeat what we saw in 2012. Looking a little ahead, starting in August or September, the trend points to the arrival of a new El Nino with possible impacts in South America, because the El Nino pattern brings some different pattern from South America in rainfall and dryness. So have to keep an eye on this. So this is the main weather pattern for this year. So looking a little bit deeper into the El Nino that's gonna come to us in September or August, have to remember that it's pretty important to keep an eye on South America, because El Nino has the pattern to bring a normal or above average rainfall to the southern half of the continent here in South America. And on the other hand, normal or below average rainfall to the northern half here in South America, so taking the most part of Brazil. And also have to remember that the greatest losses here in Brazilian soybean crop recently occurred in 2023-24 crop, when exactly an El Nino caused important yield loss, especially in Mato Grosso, the biggest Brazilian producer state. So it's really important to keep an eye on this. We're not saying that we're going to have problems, but maybe we can have some problems here in the South American crop. So it's pretty important to keep an eye on that. Going ahead, I need to see the crop calendar. So right now we are coming to, we are now in the harvest of the soybean crop here in Brazil, in the development of the soybean crop in Argentina, and the pre-planting in United States. So when we look to, this is soybean. When we look to corn, we are starting the harvest in Argentina, in the middle of the summer harvest here in Brazil. The planting season is just started here in Brazil, but it's a little bit delayed right now of the winter crop. And of course, in the United States, the same thing as soybean, we are in the pre-planting moment. So let's go ahead and talk about the supply first. So we're gonna divide this presentation, the supply side first, and then go to the demand side. So first of all, we're gonna talk about in a chronological way of Brazil and Argentina, because we still need to define, we still need to have a definition of these crops, 2025-26. Then we go ahead to the US, talking about the new US crop. Okay, looking to Brazil, it's another year, 2025-26, of growth in area, like 20-25 years of growth in area here in Brazil. And the weather were good, most part of the development of the crop. And we are going to see, I believe that we're going to see a new record crop. Everything points to that. So now we are pointing to a crop of 179.5 million tons, our January estimation. The USDA on February was pointed to 180 million tons, so pretty in line with the market. Have to remember that the CONAB, the official number of Brazil, is 178. So I believe that everybody's talking the same language here. So everybody's believing that we are going to have a crop here in Brazil, a big crop, and close to 180 million tons. But we have one important thing, that at the end of January, and between the end of January and the beginning of February, we have a low rainfall here in Rio Grande do Sul, southern state of Brazil, an important producing state here in Brazil. So these may bring some cuts to the Rio Grande do Sul yields. So we have to keep an eye on this, because there is room for some cuts in the Rio Grande do Sul yields, and of course in Brazilian yields. So we have to monitor this. Maybe now in March we're gonna make some adjustments in our number, but I don't believe I don't believe that we're gonna have big losses. So the trend is still pointing to a record crop here in Brazil. And going a little deeper into this that I said about the weather in Rio Grande do Sul, we can see here that really we have a low rainfall between January 22 and February 20. And we can see that the NDVI decreased a little bit. So there is room, like I said, there is room for some adjustments, some negative adjustments on the soybean yields for Rio Grande do Sul. Okay, entering the supply and demand table here in Brazil. These are our numbers on the left and USDA numbers, pretty similar, you can see. And for 2025, with a crop close to 180 million tons, we believe that exports could rise to 112 million tons, coming from 2024-25 of 108 million tons. So we believe there is room. We can see here on the right chart, that the export pace is really good right now. It's 2.5 million ahead of 2025. So we see the exports rising like 4 million, or being bigger 4 million than last year. So we still believe that this could happen. Of course, we need to monitor how will be the relation between US and China, how much China will buy from US, how much China will buy from Brazil. But now we believe that the trend is toward a new export record in Brazil of 112 million tons. In the domestic side, the highlight is the B15, the blend here in Brazil of biodiesel, that can become B16. But we believe that the election race may prevent this increase that is scheduled for April. So we have to keep an eye on this because this can increase our crushing here in Brazil. So we have to look at this with pretty attention. So going a little ahead, the harvest here in Brazil is a little delayed. We can see here on the right chart that is 31% till now against 38% last year. So it's a little bit delayed. We have a lot of rains in the central part of Brazil over the last weeks that are delaying the works on the fields. Of course, we had a delay on planting pace on September, October 2025. So we're already expecting some delay in planting, but the rains that we have that we recorded here in Brazil over the last weeks are turning this delay a little more important at this moment. So we have to keep an eye on this. And looking to the weather for the next 14 days, we can see that there's still some rains coming to the central part of Brazil, but at the east part, I can say, and most part of central west and southeast here in Brazil, we may see some low rainfall. So the works on the fields can advance better, we believe, but still have to keep an eye on Minas Gerais and parts of Goiás. They're important states that maybe still going to have some problems with the high humidity. So looking a little ahead, between 8 and 14 days, the first days of March, we can see that the rainfall will decrease in most part of the country. So this may favoring the harvest in Brazil. So we need to pay attention still to Rio Grande do Sul, because once again, we may see some low rainfall over the next 2 weeks. So they are still in the middle of the development of the crop. So this needs attention too. Looking to March and April, we can see that the forecast now is for below average rainfall in the most part of Brazil. So this could be good for the harvest space. And if you look to April, the same thing. So this can bring the next 2 months could bring some better weather for the harvest to advance here in Brazil. So important to keep an eye on this too. Going ahead, looking to the farmer selling, we are now soybean is also delayed here in Brazil with 30% sold till now against 35% in the last year. So of course we are seeing the prices being pressured by the entry of the crop. So this maybe slow down a little bit more the farmer selling, and we can see that in the corn we also see some delay with 79% of the second corn crop sold till now. So this is the same pressure you can see in both markets. So prices are not helping too much, especially now with the entry of the soybean crop. We can see some more pressure over the prices. When I look at the soybean basis, the same thing that I told the last slide, the entry of the soybean crop is putting pressure. So this big production is weighing heavily over the basis. So this is the main reason that we are seeing low prices here in Brazil. When you go to the soybean meal, soybean oil supply and demand here in Brazil, of course, with an increase in crush, we may see an increase in production of soybean meal. And with bigger production, we can see we expect that the exports will increase also in 2025-26. The domestic use, of course, increasing too, and the level of the stocks are pretty close to 24-25, but a little higher than we saw in 24-25. When you look at the soybean oil, of course, B15 is the big thing here. We are not working with B16 yet in these numbers, but we can see that the production is rising, the exports may rise, and the domestic use also may rise, and this is pretty important for us to keep these ending stocks at almost the same level of last year. Going to Argentina, the big thing here is that producers in Argentina are opting more for corn this year, this 25-26 season, because of the margins. So corn margins are better in Argentina for the producers than soybean margins. So the trend is for a decrease in the soybean area, and this may bring a small production. So now the crop should be below 50 million tons. The USDA last number is pointing to 48.9. So this is a big thing because there should be less production in Argentina. So maybe we can see that the exports may fall against last year. So this is an important thing because this open room for Brazilian soybean, for US soybean to gain share on the Chinese market especially. So let's see how will be the definition of this crop in Argentina. Putting this in the supply and demand table or balance, we can see that with lower production, the export should fall, in a big fall from 12.5 million tons to 4.6. We have to remember that 12.5 is a little bit out of the line, I can say, because these exports in Argentina in 24-25 was most for China and covering the absence of China in the US market. So this is not normal. This is normal for 4.6, 5 million tons. So the trend is the exports in Argentina coming back to a normal pace, a normal level. So this is the trend right now. So, and of course, crush in Argentina may rise again, and offering more soybean meal and soybean oil. They are the biggest exporter of soybean meal and soybean oil in the world. So the production should rise again with more crush this year. When you see the farmer side in Argentina, we can see that it's a little ahead of from last year. Not just the new crop, but also the old crop. So Argentina's producers are selling more because of the cut in retenciones, import taxes that happened in the end of 2025. So this is good for Argentina. So the macroeconomic environment is a little better. So producers are selling more in Argentina right now. When I look to the sides, to the weather for the development of the crop in Argentina, we can see that for March and April, above average rainfall is expected. So this may be good for the final development of the crop. So we may not see big problems in the definition of the Argentinian soybean crop. Looking to the soybean meal, soybean oil balance, like I said, more crush, more production. So production of soybean meal rising and exports rising. So this may keep the ending stocks level at almost the same level of 2024-25. When we look at the soybean oil, the same thing, more production, more exports, and ending stocks in the same line of 2025-26. Of course, we can still see some changes in these numbers related to the production, but this is the picture right now. The main point here is that Argentina is going to export more soybean oil and more soybean meal, and Argentina is the biggest exporter in the world. So this is important for Brazilian soybean meal and for United States soybean meal and soybean oil. They are big competitors, so have to keep an eye on this. Going to the new US crop, we had in like I don't know, a week ago. Yeah, a week ago had the Outlook Forum from USDA. So we had the first numbers. It's not official, but unofficial numbers for 2026-27, and the first numbers is pointing to a crop growing, a soybean crop higher in United States in 2026-27, because especially of the expected growth in area. So with this area, we can see a crop of 121, close to this. That should be the second higher crop in the United States. So it's a big thing, because this could bring more production, more supply for the US side of the equation. So this is the big thing right now. From March onwards, we need to look to this with much attention. So and why this is happening? Because we have here the soybean and corn ratio. So the producer in US use this to decide if he plants more soybean or more corn. So right now this ratio is better for soybean. So over 2.4, you can see it's better to plant soybean, and below 2.4 is better to plant corn. So last year with this very below ratio, so we saw a big increase in corn area and a big decrease in soybean area. Now with this ratio better for soybean, we may see the soybean area growing and the corn area decreasing in this new crop. So right now, like I said, the first number, the official number, will be published on March 31. So this is unofficial numbers yet, but right now USDA is pointing to a soybean acreage, a soybean area of 85 million acres, and a corn area of 94 million acres. So this is what we have right now. So we have to keep an eye on this, because this ratio could change a little bit yet. So maybe you can see some changes. So it's not defined yet. When we look at the pre-planting weather for the US, we can see that we have the drought monitor on the left. We have some problems here of low humidity of soil moisture in Illinois, a big producer state. But I think that's not a big problem right now, because if we look to the outlook, the forecast for the next 3 months, the rains should be normal or above average for United States corn belt. So I don't believe that we're going to see big problems to the US crop. Going to the supply and demand balance, with this production of 121, export should grow. So USDA is optimistic about exports to the United States, despite the relation of between US and China and other countries, the tariffs going on. But USDA maybe is a little too optimistic, but it's the number that we had. And in crushing, the big thing is that we can see a big increase in crushing because of the EPA proposal that I'm going to talk a little bit about in the next slide. So this is pretty important to keep the stocks almost in the same level of 2024-25. If we see here on the right chart, right now the prices are $11, $11.30, $11.50. So we can see that if we look to the relation of stock use, maybe this price could be a little lower than where he was right now. So there is room for some adjustments in Chicago. The export sales pace, we can see that we have delay. Of course, United States are exporting less than last year because of the absence of Chinese purchases for many months in 2025. So you can see that there's a difference of like 8 million tons. So the exports are 8 million tons below last year. So, but the pace is better right now. It's increasing. We can see here that it's accelerating. So we have to keep an eye on this, because this could change a little bit the supply and demand 2025, 26 supply and demand for US, and obviously bringing different beginning stocks for the new crop. Looking to the crushing and oil share, we can see that the oil share is pretty high right now. So this is incentivizing the crushing, and the trend is for crushing to be strong over this year. So right now we are 11% ahead of last year, and USDA is pointing to plus 5% versus 2024-25. So the crush right now is stronger than expected. So this is a big thing. So have to keep an eye on this too. So these oil share is encouraging the crushing in the United States right now. When it comes to the new EPA proposal, you need to remember that in June 2025, the EPA bring to us this new proposal of blend, a big increase of 67% in the blend of biodiesel in the United States, or renewable fuel in the United States. So this should bring a big increase in soybean crush. So this is pretty important. So right now, USDA is pointing to, for 25-26 to 69.9, and for 26-27 is pointing to 72.3, pretty close to what we expected. So we have some plants being under construction, and this could bring more crush capacity to the United States over the next month. So this is a big thing. This could change the game for the US processor. So we can see here that for 2026-27 expected big crush, bigger production of soybean oil, bigger domestic use, of course, the big thing here, and exports falling. So we can see that this may keep the ending stocks at almost the same level, but maybe USDA is being too much optimistic regarding the ending stocks. We believe that these stocks could be lower than this, so have to keep an eye on this. And when we go to the soybean meal, we can see that, in the other hand, production rising, exports rising, and domestic use rising also. This is the first numbers for USDA. We believe that USDA is too optimistic when talking about exports and domestic use. We don't believe that exports and domestic use can rise this too much. So we can see some ending stocks bigger than USDA are pointing right now. So this is pretty important, because this could be a point of pressure over the soybean meal prices. So let's see how USDA will bring these numbers on the May WASDE, especially when the first numbers will be published. So this is pretty important to keep an eye on this. So Thais,
let's go to corn.
Yes.
So let's discuss now how corn market is performing, what we are expecting. So for Brazil, as we mentioned in the beginning, the winter corn is the main one for support this production, close to 140 million metric tons for Brazil. We are pretty optimistic with that scenario, but there are some risks ahead, and we need to check that. Comparing to talking about the new cycle, Conab is still in this similar level, 138. We're going to forecast our figures. We need to check a little bit more details how planting will evolve, so a little bit early for us to mention the 25-26 cycle, but we already have some elements here for us to discuss. Checking the supply-demand scenario, as we mentioned in the beginning, ethanol consumption, so ethanol production, corn-based ethanol is an important line for domestic use. So when you check the supply-demand for corn in Brazil, domestic use is an important line, and now exports and exports keep the same pace, close to 40. And it took this pace in the past years, and they're keeping that. But now we are seeing domestic use increasing an important pace. This might compete with corn exports in Brazil, especially if you face some issues with production for the new cycle. So those elements we need to go a little bit more in details in the sequence. First, starting with the corn, ethanol corn-based market, it's huge. It's increasing month over month for new plants being allowed to be built, new plants starting operating. So recent months, we saw new plants in Mato Grosso state and Rio Grande do Sul state. In the coming years, the number of new plants tend to be the double as it was. So this is now an important new reality for national consumption for corn in Brazil, and is not more concentrated in the center of the country, where usually the winter corn is located. Is getting around Brazil, and this is changing the dynamic for the corn market, the mass corn market. How it's changing. While when we compare when you detail the domestic consumption, we saw that the animal consumption, so corn for feed, the main driver, but recently it has been growing on an organic pace. Of course, Brazil is an important player in the international market for meat, mainly chicken, hogs, but is still growing in an organic pace. While on the other hand, we have been seeing an important market surging, that is the ethanol corn-based market. So for this year, the market is expecting something close to 28 million metric tons of corn being used for producing ethanol. As we highlighted, planting right now is delayed. Once we delayed the planting of soybean, harvest of soybean, of course, the same area, the corn planting is delayed. But different than other years, even though the corn window is pretty well known in the market, that is more sensitive than the soybean window, farmers are pretty confident that planting corn will be a good strategy for the year. So we are not expecting this delay to impact in the acreage size. So probably Brazil will plant the amount expecting the beginning in the coming months. And let's go in detail how weather should support yield. Then we need to count on yield to see how producing corn produce will evolve. When you check the accumulated precipitation in the coming days, so we have next week here and then 2 weeks ahead, we saw lower rainfall expected for central region in both 2 weeks. So should favor the progress of soybean harvest and then planting of corn. But once corn is planted, we need to see rains back to evolve the development of the crop. And so we are seeing some rains, heavy rainfall expected then for Minas Gerais, Goiás state, and also Mato Grosso. So it's a mixed feeling right now in Brazil. On the other hand, we need to increase the pace of planting, but the one of our plants that need to receive rains. When you check the maps, no big issues so far. So we will continue monitor the evolution of that. Fair to point that every month we are updating those pictures and share inside HedgePoint Hub. So weather now is the name of the game for corn market in Brazil. And let's see how it will evolve. Look a little bit ahead for March and April, as we highlighted for soybean, the same scenario here for connecting to the corn market. So we see some points below average rainfall in center of Brazil. So gonna favor planting, but once again, might be a challenge for yield, for crop development in this region of the country. And then we go to March, it's like below average rainfall, so we need to monitor how this, we see here, important region of Brazil, Mato Grosso, how this will evolve. When it comes to exports, as we mentioned, Brazilian exports has been growing the past years, kind of stabilized close to 40 million metric tons. We're still confident of that pace for 2026, growing a little bit again. So, of course, the beginning of the year is not a clue, as we saw for soybean, once we are now harvesting the some corn more oriented to the domestic market, but the overall sentiment is an increase during the year, similar pace what we had in 2025. This is the expectation. Of course, competition with United States and Argentina will be key. Argentina, we're going to see in few minutes, going to have an important crop, amount of corn to be produced there. The name here we need to start monitor is China. Yes, we're talking about China in Brazilian exports of corn, because we might see more appetite coming from China for corn. This could be an opportunity for Brazilian corn exports. So we're going to detail that soon. When it comes to bases, so Brazilian bases for corn, Brazil, here you have the reference for exports, Paranaguá, continues to show some strength, as we have been highlighting. This dispute between domestic market and external market has been supporting. Last year was also a year, almost the entire year ahead of average, the 5-year average. 2026 is make history once again, record levels, record historical levels for the beginning of the year, point to that new dynamic in the corn market in Brazil. To the domestic market, similar scenario. Here we have location for Goiás state in the center of the country. Not that supported as for exports, but is still supported, and similar to as you mentioned for last year, below average. The final months of the year and continue this pace for 2026. Of course, once summer crop arrives, this could add a little bit bearish. Let's see, average should show us this stability to a little bit pressure. Last year, it's hold a little bit support. Let's see how this year will perform. This support seems to be more present in the market than in the past. Mention Argentina, as we highlighted, while soybean is facing some issues or reducing acreage for Argentina soybean crop. For corn, it's a better scenario, better margins. Argentina farmers preferring planting corn this season. This 53 from USDA might be growing, might be bigger, and local exchanges also forecast something bigger than the historical 62. Yes, talk about 62 million metric tons of corn expected to be produced in Argentina. So it's pretty important and tend to be a strong competition for Brazilian exports in that matter. So let's monitor how this crop will evolve. Fair to mention that the Argentina corn calendar is a little bit longer than the soybean, than the calendar in Brazil, so different stages through coming months. So important for us to monitor the pace of this development. The supply demand, as we highlighted, there is room for bigger exports. You see here mentioned Argentina close to 40 million tons of exports, an increase of 25%. One season to another, if you add here more than 10 million tons of corn, there is no domestic use enough to keep that corn inside the country, so probably pressure into the international market into exports. Argentina, different than Brazil, is not did not focus on developing meat consumption, so there is no this feed line consumption. See here, Brazil is close to 60 million tons, Argentina we're talking about 12. So that the increase in production of corn tend to be this oriented to exports. And we have been seeing this clearly in the farm selling pace, similar to soybean, but in a stronger pace than soybean. See almost double the pace of farmers selling for corn. Farmers seeing that huge crop coming ahead and working in advance, selling their corn and pricing. So they're not selling, they are also pricing the crop. Let's check United States, how the crop's performing there. As we well highlighted for soybean, the ratio for soybean corn, the first figure for Outlook photo is showing a decrease in acreage for corn, increase for soybean, but we need to remember that decrease acreage for soybean is still in a pretty high level, historical level for acreage. You see here, 34 is one of the biggest in the past years. So the second biggest in the past year. So it should keep production close to 400 million metric tons of corn. Of course, 30 million metric tons less than last year. That was a super record for American corn production, but it's still an important volume of crop going ahead for corn in United States in this cycle. We need to see how the end of March will show the plantation and how the market will evolve, but this shift a little bit in acreage between soybean and corn also will add a little bit more flavor to the U.S. weather market. We have been missing the last year's U.S. Official real U.S. Weather market. So this year, with this combination, the shifting the acreage in a neutral pattern, as Luiz highlighted, should add a little bit of volatility in the American summer. Putting the crop, the 400 crop of soybean into the table, of course, there's no room for that pace of increasing domestic use and export, so a little bit tight, a little bit lower than in the past, trying to keep the stocks bigger than 45. With this scenario, now we are in 13% stock use, so we are here pretty close to what Chicago has been trading, but once we talk about 11%, stock use ratio should bring a little bit of support for future prices in the United States. Exports has been one of the big driver for American corn. We see here that the pace of almost the entire crop until now bigger than the 5-year average, so supporting this figure of 83 for the end of the cycle. Much better than last cycle. So this is an important pattern for American exports, also an important competition for Brazilian corn, as we highlighted. But let's see how China will perform. Probably, or we could have some opportunity there. I'm gonna check. So mention about demand. We're gonna start with soybean. For soybean, we have been discussing this the few months, that China seems to be pretty comfortable with this 44 million metric tons of ending stocks for soybean, keeping the stock use rate close to 33%, so approximately 4 months of consumption. Seems to be comfortable. We have been China performing this second trade war in a very moderate mode than in the first one. So stocks bring this stability for China for the soybean market. So they are not desperate to buy soybean, and then gonna check details on ports as well. So what they have been doing, what they have been performing for soybean, they have keep increasing import space, mainly driven by crushing. We have been discussing this as a pattern for China to import soybean, crush, and consume the soybean meal for feed consumption. Of course, they are trying to diverse a little bit from the United States. We saw historically this from 2021, the share of United States decreasing crop over crop, and South America getting share here. Of course, for the coming months, this blue light here for Argentina tends to reduce, as we discussed for Argentina. So there's room for Brazil also gain space here. And let's see how we will evolve the discussions with United States and China. But they still need to demand soybean. They are forecasting to grow to next cycle 112 for crush. So there's room for them to continue import soybean, and let's see how margins are supporting that. Here's a different way for us to see this performance. So Brazil gaining room in this space. These movements for Argentina tend to reduce. If you check the past, tend to be lower. Argentina is pretty oriented to the crush. demand rather than exports. So there's room for Brazilian beans to be shifted to Argentina. Margins in China is still not optimistic. We saw last year the end of the cycle decreasing the margin for crushing. The entire 25-26 crop until now, not good. So this is not this that is incentivizing them to buy, to import. That's why you have been seeing this nice low pace. Of course, they still crushing, they still importing, but it's not the margin that is incentivizing the crush. We saw the port stocks recovered. Last year, we were in a momentum not that good for China, with port stocks doing the lowest level for the historical data. And now they are pretty better scenario, pretty better situation than last year, for example. So port stocks is adding the discomfort for them. When you discuss corn, this is the topic that we mentioned that could add some opportunity. Market could see here some opportunity. So, of course, corn's the biggest orientation is for the pig market as the soybean meal. Margins are not that good, similar to crushing for hogs as well. But they keep increasing the pace of slaughter. And the big topic here is that they have been keeping the size of the herd in the country, and so they still consume. So there is still room for them to continue, for them to start increase a little bit the pace of corn imports. If you take the historical amount, in the past, coming back in the end of the first trade war, when they started importing corn, so in there an opportunity to import corn, and then they reduced last cycle, expecting to increase in 25-26. So there's room for that to be bigger. We need to remember that China used to keep important amount of ending stocks to use. So there is room for them to recover this amount of ending stocks, adding more imports. Here we have the historical level of these ending stocks. Remember, we saw soybean few minutes ago, opposite direction. And for soybean, this adds a lot of attention for us, in our opinion. And there's room for that to increase, for them to return this level of stock to use. For corn, bigger, close to 70, then it was close to 56. So here is the point for us, in our opinion, to monitor during 2026 when it comes to the corn market. So Luis, let's summarize everything that you have been seeing and discussing. Funds.
Yes, talking about funds positions in Chicago, we can see that we had a big movement of the funds buying soybean contracts over this year, starting in middle January. So this is based most based on the EPA proposal, on the hope of new Chinese purchase of U.S. soybeans. So we can see that the funds are now very long in the soybeans. But in corn, like we saw in the last year, almost most part of last year, they are still on the short side, because despite the big exports in the United States, we are still seeing the trend for big stocks. So this is weighing on the prices, so keeping the funds on a short position. So, but the big thing here is that we can see a big movement here in soybean. Of course, this fast and big movement open room for some adjustments in the short term. So we need to keep an eye on this and monitor this, because there are some opportunities for hedgers. So let's see how this will evolve. And closing the presentation, let's bring what we need to watch in 2026. So in the short term, of course, the South American crop forecast for definition of Brazilian soybean crop. Weather remains an important factor, like we said. In Rio Grande do Sul, southern Brazil for soybeans, in Argentina for soybeans and corn. So we need to keep monitor the weather in the next weeks and next months. In US, the EPA decision may have some news on March. EPA sent to the White House, I think last Wednesday, the proposal. So maybe till the end of March, we have some news and some definition about this. So this is pretty important. And of course, after March, starting in April, the planting of the new season. So have to see how will be the size of the areas of soybean and corn in the United States, and of course the weather for the development. In the medium term, the development of new crop will be the main point for the corn and soybean market, the US crop. So we'll have another weather market, like they said, with neutral pattern, but everything can happen in a neutral pattern, so I have to keep an eye on this. The Chinese demand for soybean and corn will be decisive, of course, especially for soybean, obviously, but for corn too, because like Thais showed to us, the trend is for China to buy more corn this year, to import more corn. And this may favor some origins like Brazil, like Argentina, and maybe US. So I have to keep an eye on this. And looking a little ahead, the last months of 2026, we have the planting intentions for the new South American crop. It's a little early to talk about this right now, but in the middle of the year, we're going to talk about this. And of course, margins will be decisive for the definition of the areas here in South America. And the risks for over all of this, of course, geopolitical conflicts. So especially US, the relation between US and China and other relations around the world. So we will have a potential meeting in April between President Trump and President Xi. So this could bring some important news. So have to keep an eye on this. And of course, the weather for US crop that should be neutral, but anything can happen. And for South American crop that will be planted starting in September, October, we'll have the El Nino phenomenon. So it's important to keep an eye on this too. I think that's it.
Yeah, let's see. Some questions from the audience, from guys.